So we're gonna talk about divergence some more, and then I'm gonna show you some of the trade setups that we use where divergence is critical. We started trading our pullback system 14 years ago, and it started with a very simple trade. And then as I started looking at that trade, I started wondering, well, what else could I use to find out what's going on in the current bar? What type of information in the current bar is going to help me understand what's about to happen next? So it was a process of learning. I did a number of different things, and a lot of them didn't work out. A lot of them have become part of what we do every single day. So I'm going to show you we're going to go very quickly over what divergence is for those of you that weren't able to either attend on Thursday or to watch the video. I'm going to very quickly go over some of the things that we talked about. Then I'm going to show you the setups that we trade and the indicators that we use. Okay. All right. So let's get started. So again, about me, for those of you that don't know me, I started out just like most of you. I had a job where I was a bit overwhelmed and got tired of that job and wanted to find an easier way to make a living, right? Because we all think day trading is easy. So I thought, I was introduced to day trading by a customer of mine, and I kind of got bit by the bug like many of the rest of us. And I decided within, 6 months or so, because I'm so smart, I was going to be able to turn this thing into a career and sell off my construction business, make a bunch of money at that. And anyway, you know how that goes. I struggled for 7 years, and I was always looking for the easy way. Yet I kept making it more and more complicated. Then something really big happened. When we get to the end of this presentation, if you're curious about that, I'm happy to talk about it. Or you could go to our blog. If you go to our website, up at the very top, you'll see blog, and there's 4 or 5 articles where I talk about my path to get to where we are today. So you can either go there or just ask me questions when we get to the end. But since 2008, this has been my full-time job. Day trading has been my full-time job. And subsequently, I became a trading educator because, when you start to do something and you're doing it pretty good, people start saying, hey, wait a minute, how are you doing that? And can you help me? And that's what happened, because I was in a small group of guys that we were sharing our screens on Skype. And as it turns out, we were all struggling and failing together. But then suddenly I started failing less and struggling less, and they wanted to know how I was doing that. So I started teaching them what I was doing, and ultimately developed this whole trading system. And all of the indicators necessary for this trading system, I started developing those, and I really, I found something that replaced being a contractor. When a contractor we get our fulfillment out of creation, out of building something from nothing. And I certainly did that with this. So initially, day trading wasn't all that fulfilling for me. But when I started doing this, it absolutely, and helping traders. And we've been doing it now since 2009. So we're starting to get pretty good at it. We have a lot of traders that have been with us almost that entire time. They still come to the trade room every day. You can meet them if you like. This is the disclosure statement that we have to put up. Basically, it says, don't trade with real money If you do trade with real money, don't trade with money you can't afford to lose, because you probably will. Okay? That's basically what that says. All right, divergence. Very simply. And again, this is a much brief, I'm going to breeze through this in about 10 minutes. Much more brief than what we talked about on Thursday. So if you saw Thursday, hang in there. We got some other things we're going to show you, but we want to get through this for the folks that need a refresher or didn't get a chance to see it. Okay? So divergence, quite simply, is when price and momentum are no longer in sync with each other. Okay. And so typically we're going to measure momentum by, like what you see down here at the bottom of this chart. You see this relative strength index, and this is how we measure momentum a lot of times. And I know a lot of you probably have something like this on the bottom of your chart. So when you see that price is setting a lower high, but momentum is setting a higher high, that's called divergence. Okay. That's what we're looking for. So what happens is when we're trading divergence, it has to diverge from something. Now, it can diverge from other things, but for our purposes, we're going to use momentum. Okay. So when you see that your momentum oscillator, whichever one you use, the RSI or the CCI or stochastics or MACD or whatever, when you see increasing buying momentum, that means that selling momentum is decreasing. Okay. And vice versa. All right, so that's very important for us to understand. Now, to calculate momentum, and you see all these different momentum oscillators that you can use to understand momentum, there are a lot of different algorithms used to calculate momentum. Some of them can be quite complex. Some of them can be quite simple. The RSI is one of the most common and most highly thought of momentum oscillators. But for our purposes here, I'm gonna show you an illustration of how momentum is being calculated, no matter which algorithm is being used. So we're going to use the momentum oscillator. There's one called momentum, and it's a very simple algorithm. Okay. So we're going to take the closing price of the current bar and we're going to subtract it from the closing price of X bars ago. Okay. So that's what this looks like. And we're going to show you how momentum is calculated and what it is you're seeing when you see those wavy lines on the bottom of your chart. I mean, for me, forever, that wavy line was just something that was, it was just out there. And that was something that very smart people figured out. And I didn't need to know anything about it. But you do need to know and understand so that divergence makes more sense to you so that you can have confidence in trading it. So this is how it's done. So remember, we're going to take, and let's just say this is the current bar. None of this has happened yet. Okay. We're going to not look at this part, but this is the current bar. And then we're going to go back X bars ago. Okay. So we're going to take the close of the current bar and the close of, we're saying 10 bars ago here. So we take those numbers, 94.40 and 94.33, and when we subtract them, and we come out with 0.07. Well, that's a point on a graph, right? 0.07 would be the point on a graph. So now you can plot that point. Okay. Now let's go to the next bar. Now this is the current bar. We have the close of this bar minus the close 10 bar back. Okay, you see how that works? Now we have a second point. All right. Now, so we can go through the whole thing, subtracting one from the other, and we start to see that sometimes the value is negative. So you have a zero line in the in your oscillator. So now you're plotting below the zero line. And as you continue to calculate through here, you continue to build points. And when you see that wavy line, that's how it's calculated. Okay? So that's how we're calculating momentum. So to illustrate it a little bit easier to understand, maybe at a glance. So here we have price. Okay, so these are just bars in a chart, and it's super simplified just so you can understand. And then we have this slope of price. Okay, this is our slope, and this is what would be typical of the slope of our momentum oscillator. Right? Now they match. Notice, and the magnitude of the slope is the same pretty much all throughout. So we do not have divergent conditions anywhere along this line. Price and momentum match, which is typical. We want to know when things are no longer typical. Okay, when something atypical happens, things tend to change. Okay, so when price and momentum get out of sync with each other, you can see that there are periods of time in there where maybe the momentum oscillator has started heading up while price is still dropping. Okay? This is very important. And hopefully I got a lot of emails actually after Thursday saying that this really helped people to understand divergence and what's happening. So if you look at a chart and then you look at an oscillator built by those points, you don't always necessarily pick it up with your eye when divergence happens. You really have to be very practiced. You have to really work at it. So you look and you see, okay, yeah, price and momentum are matching. Okay, so nothing going on there. Yep, so we're setting a lower high. Nothing going on there. But it's very easy to visually miss that, oh, yeah, I need to check the lows too. And then you see that you're setting a higher low and a lower low on price, but a higher low on momentum. This is huge. And if you got nothing else out of this whole event, knowing and understanding that when momentum turns before price, price will typically follow momentum. That's our edge. Okay? But why don't more people do it? Why don't more people use divergence? You would think something that powerful, something that simple would be more widely used. You don't hear a lot about divergence being talked about as the main source of information for making trade decisions. But it's so powerful, but people have maybe heard of it or used it, but you can easily get intimidated by it. My experience with it has been that when I was trying to learn how to read the lines, right? And I would try to pick up where divergence was, and I might pick up one, but I'd miss 3, 4, 5 areas of divergence. So it wasn't very efficient, and I wasn't finding it was helping my trading. So I got rid of it. So a lot of people are just like, well, okay, where is it? I don't know. It's too hard to find, so I'm going to give up on it. And I gave up on it. But then I came back to it. And I started realizing, if I could develop something where I just have a yes or no, does divergence exist? And then print that on the chart. then I don't have to have all that stuff at the bottom. I don't have to have all those wavy lines. I don't have to have all of that information that is not actionable information. There's a lot of information that's taken up a lot of your chart that you don't use. You only want to use it when it's a yes or no answer. So we've got these divergence indicators we developed, and then but they worked so good. We developed the Super D indicator, which has 7 different momentum oscillators inside of it, and I'll show you that in just a little bit. So we use a lot of divergence in our trading, and in fact, it's a trigger oftentimes to get into a trade, and not just a trigger to get into a trade, but we use it to help us manage our trades. So once you're in a trade and you're trying to figure out how to manage that trade, we use divergence to tell us how aggressively to start managing the trade. So we've taken a philosophy of the heads-up display like you see on a fighter jet, where the pilot has all of his information that he needs for making decisions to not only fly the plane, but also to try to fight with another airplane, the enemy out there, so that the pilot doesn't have to look away from his target. That's a big problem with having so many indicators. I used to have 12 monitors, not charts, 12 monitors, because I thought I needed all of that information for making a trade decision. I now have 2, and I can show you that in a minute. So divergence is one of our heads-up display indicators. So you'll see that we have our Super D here, 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 here. It just shows up right where we need it, and no other confusion down at the bottom of the charts. Then we have momentum. We're reading very strong momentum. I'll talk about that in a minute. And the reason we read momentum is so we can anticipate exhaustion. So when exhaustion and when exhaustion and divergence meet, that's a great place to expect price to turn. We're also going to analyze volume as it's coming into the current bar. Remember, I said that I'm always looking at the current bar to see what kind of information is inside that bar that can give me a heads up on what's about to happen. All right, and we also use tape reading, which and we'll talk about that. But we're looking at the rate at which processed are being orders, and then we're also looking at relative order flow. Okay, so exhaustion. We all know, right, that price never moves in one direction. It always moves and then pulls back, and moves and pulls back, and moves. It can maintain a long-term trend that way, but every trend has a series of pullbacks, and these pullbacks are called exhaustion. This is where typically, historically, prices moved so far, so fast, that exhaustion is likely to set in this area. Okay, and when we're talking about exhaustion, it could be any number of things, but we don't care what it is necessarily. But we want to read momentum. We want to see a strong hard push so that we can anticipate that exhaustion is likely. Okay, so reading momentum is very important to us so that we can anticipate exhaustion. We do that by trying to determine when price is overbought or oversold. Again, this is based on historically, if price moves so far over a short period of time, it's likely to become overbought or oversold. Meaning, I don't know, traders are starting to take profits. If they're in a longer term trend, this is a good place to start taking profits. typically, if you're going to ride a trend, you're not just going to ride a trend until and keep everything on until it hits your target or your stop. Typically, if you're going to trend trade, you're going to find areas where you're seeing weakness, and you may start to scale your trades out, take some profits. This is what causes these pullbacks. Okay. So we've got areas where they're overbought or oversold. Notice we have an oscillator. This is probably the RSI, where it exceeds the extreme for overbought or oversold. Wherever it exceeds that extreme, we're going to show it right here on the candlestick. You don't need this oscillator, because the whole time, all of this information has no value to you while you're trading. You only want to know this and this. So that's why we just put it up here. And again, that's our heads up. That's where we're looking, right? Now, volume is very important to us, but not just volume for the sake of volume. You know, the big boys know that we're watching volume. So they do everything they can to mess with us. But if you're watching for a particular type of volume, they're going to tilt their hand and let us know that something is about to happen. Okay. So if we see a churning bar where we get a bunch of volume coming in and then the sellers jump in, and we call it churning because a lot of buying and selling is happening up at maybe at the top of the bar, then we know chances are the exhaustion has set in and the sellers are starting to take control. So as an illustration, this guy's fighting his third fight of the night. He's pretty tired. This guy hasn't been fighting at all. He's been sitting and resting and waiting. So typically the guy who's less tired is going to have an advantage over the guy that's really tired. So now we also want to track the market manipulators. Who are these people? The HFTs, the hedge funds, the institutional investors. These guys are the ones that when you're sitting and watching a chart and then suddenly price just takes off. Well, that's kind of confusing sometimes, right? You don't really know what to do. A lot of times people will start to jump in because they're like, well, I don't want to miss out on this. And you start getting scared. And this is exactly what they're trying to do. They're trying to create a response by pushing price up or down, but they're doing it in a strong way. We don't want to jump into that. We want to take advantage of the people that do jump into that. That's where our edge is. Okay. So we're going to use volume analysis by reading what's going on inside the bar to determine when people are scaling or when people are afraid or when people are jumping in. But anticipating exhaustion is what it's all about. Now, tape reading, this is one of the first things that really started changing our trading. We're gonna watch the tape. And it used to be standing there looking at a ticker tape to help understand what the big boys were doing. So you would know how to trade, what if they're doing something, they must have a reason for doing it. So you want to see what they're doing. So today's tape reading is done on the time and sales window. But if you watch a time and sales window for a few minutes, you'll realize it's kind of hypnotizing and you won't gain a whole lot of information from it. But it's there. The information is in there. So what we want to do is we want to see the rate at which the orders are being processed. And we're looking for the speed at which the orders are being processed so we can understand where these big boys are doing their thing. Okay. Again, we don't want to jump in when they're doing their thing. We want to wait for the reaction, and then we can anticipate what's going to happen next. That's our edge. Okay. but we're doing it with a confluence of information. And we're doing it all with non-correlated data. It's price, volume, order flow, momentum. But when they all come together and they all say, yep, something's about to happen, well, then we can start gaining some confidence in our decision making, and we can start gaining some consistency in our trading. Right? So we have just a ton of confluence on these indicators. So we've got momentum. So momentum is a strong push. So we'll see these bars going from black to gray to a lighter gray to almost white. When these momentum bars start getting lighter in color, a pullback is almost imminent because of exhaustion. We know price cannot maintain momentum. We have overbought and oversold conditions where, again, we put it right here. Again, we're anticipating exhaustion. We have our speed tick indicator, which is these little arrows here, tells us that the orders being processed through the exchange are likely going through the exchange much faster than us little retail traders can possibly trade. The ricochet indicator tells us, that's this arrow, that there was a sudden acceleration. Now, there's a difference between top speed and acceleration. So speed tick is top speed. Ricochet is acceleration. We noticed that when we had sudden acceleration of orders being processed, even if it didn't maybe reach the top speed, but the acceleration was sudden, we would often get a pullback. Okay. And then we have our pullback alert indicator, the dots with the numbers in them. It looks very simple. There's a lot going on inside this dot. And we wanted to keep that off the charts. All right. How many of you have gone to an event where, like this one, where you just want to see what this guy's doing? And he ends up with a chart that maybe looks something like this. And he's saying, he's pointing around and he's saying, and this is where I took this trade, and this is where I took this trade. And because of this line here and this line here, I knew that this was going to happen here. And then he just scrolls around and he's got all this stuff on his charts. And you look and you go, well, I don't need this. I only need this and this. It looks so powerful. It's like, I used to look at this and go, man, how did this guy figure all this out? Look at all this stuff. He must be really smart to have figured all of this out when this line crosses this line and then this closes inside and na. And they scroll their charts like this and they start talking about it, right? And then they talk about it and they scroll. And you're going, yeah, sounds good to me, looks good. But then you actually try to trade it. Yeah, that's a different story altogether. So we got rid of all that. We put it just the information you need right where you're looking. We have our flash indicator, which is a divergence indicator. We have our McDiver indicator. We have the FT reset, high and low of the day. All of these are areas of confluence suggesting something is about to happen. Go back. So let me show you the difference on the way we do it here versus what you may have seen in other webinars. So I'm going to show you how a trade develops. I'm going to show you what you need to know to take that trade and to exploit the edge. All right. Now this is yesterday. All these are trades from yesterday. I didn't go cherry picking trades from, years ago. This just happened yesterday during the trade room. So here's a trade. Now notice we've got some kind of channeling and then trade starts to push up. Look, the first thing that I'm looking for is a strong move. Remember, I want a strong move so I can anticipate exhaustion. So the first thing I'm looking at is a strong move up. Notice as soon as a condition exists on the current bar, what happened? Oh, there it goes. On the current bar, we're overbought. That's that pink outline. Notice that on the current bar in real time, as soon as the condition exists, we print it on the chart. So there's no printing, repainting old bars, except for the momentum indicator, which if you ask me later, I'll tell you why it repaints. You don't always know when momentum starts until you have momentum, right? So once you've achieved momentum, you go back and say, okay, well, it actually started here. That's why that repaints. And the only reason it repaints is just so you could see how much momentum that you have and where it started. You don't know you have momentum on your first tick. You have to achieve momentum. Okay. So we're seeing momentum. Now we also have indicators, but the indicator in and of itself doesn't tell us to take the trade, does it? An indicator indicates that a condition exists. It does not indicate time to take a trade. So now we're pushing up. We're overbought. We have our speed tick. The speed tick says orders are going through really fast. Very probable this bar has been manipulated by the big boys. And the volume inside this bar is churning. Bunch of buyers and then the sellers, obviously. Buyers got it up to here and then the sellers took over. Or at least got involved. And now there's buying and selling going on. So a lot of churning activity. The acceleration was very sudden. Now, on the open of this bar is where we make our decision. Boom. So we have divergence inside this rock star. And you can see from this 2D, 2 of those 7 oscillators I showed you on the Super D have now diverged from price. If you look up here, you can see that one of them is the ultimate oscillator. The other one is the stochastics. Okay, that's what this bar across the top is. Our rock star says, okay, we have a confluence of indicators that suggest that the bar is manipulated and we have a divergent condition and we have a high degree of probability that exhaustion is going to set in. Down it goes. And that's the trade. Okay. That's our edge. And it happens all the time. Now, you have to execute. You have to be ready. But if you go back, I can show you. Look. Okay. So we have all kinds of information right here. Look, all kinds of information on this bar suggesting that we might have a trade set up. Look, I've got 42 seconds. This is our timer. I got 42 seconds to get ready for the open of the next bar. Yes, you have to be fast, but not wicked fast. You have to be focused and paying attention. Okay? So that's one trade that we took yesterday. It just continued to drop. Here's another one, happened to be coincidentally on the CL. Again, this one, again, strong push up, speed tick. Now, we had a rock star on this bar, but it didn't qualify for a trade setup because it was inside this zone. So it didn't qualify. We didn't trade this one. No real strong potential for exhaustion, right? It only moved up a little bit. This is a stronger potential for exhaustion. We're overbought. We have our pullback alert. On this bar, again, we had this time only one of our oscillators was divergent, which is all we need, the stochastics. And Goes. I actually think I have a loser in here somewhere today. Okay, so this happened yesterday. Sometimes now this is the S&P 500, this is the Russell 2000, this is the Dow. Sometimes they all run exactly together. So you kind of have to pick your poison. You have to decide which one you're going to want to trade as you're watching them, because on this particular circumstance, they all set up at the same time. Now, we have a sweet spot where price is likely to pull back, which is why we trade for 5-tick target or we put on a 7-tick stop. And then we manage that stop, like I said. And I use divergence to help with stop management. But this bar opened and dropped. We all got our 5 ticks. And then we don't care what happens after that. It could continue to drop. It did continue to drop a bit. Or it could take off. Our edge is knowing what's likely to happen right now. Not 3 minutes from now, 5 minutes from now, 10 minutes, right now. Right? And here's another one on those 3 instruments again. I think I traded the YM. You could, a lot of people traded the ES. I'm always attracted to any trade where I may have help from an area of support or resistance, which would be this high of the day. But again, you had 2 opportunities, not 3. This one actually didn't qualify because I didn't have enough confluence on this bar to take this trade. I did over here. Notice it's overbought. That's this pink outline. And it has a pullback alert. This one was overbought and had a pullback alert. So both of these qualified for a trade. The RTY did not qualify there. And again, once it hits 5 ticks, I'm out. I'm done. All right, let's see. I guess we have another CL. I guess we were doing a lot on CL yesterday. I didn't even really pay attention. All right, again. Now, we have a pullback alert. Wait a minute. Now we're getting, there's our rock star. So at the open of the bar, on the trade, and by the way, this little thing on the side here, this is called our OTS, or open target stop. Okay. So it shows us where the bar opened. If we were putting on a sell order, the green arrow would be our target if we got the fill on the open. The green arrow would be our target and the red would be our stop. If we put on a buy order, the green arrow would be our target and the red arrow would be our stop. Okay. So it's a little helper tool, really. You don't make any decisions based on that. We use it more for making sure we don't trade into support or resistance, making sure some of our rules are met. We can talk about that later, but a lot of people get confused by that. They think it's a trade that got executed. So there, we lost a trade. It doesn't work every time, and nothing does. This is one trade. I think that was it yesterday. Maybe 2 trades we lost. So that was a loser yesterday. It happens. Yeah. Yeah. So I guess that was the one. That was the loser yesterday. Thank you, Mike. Another one on the CL up here. Now, this was the loser, and price is continuing to push up. So what's going to happen? What happens when there's a long sustained upward push? What happens? What happens? You know this? I told you. Exhaustion. Exhaustion is exactly what we're anticipating. And when we can identify exhaustion and divergence happening at the same time, we get a trade setup. Okay. And again, we know what's likely to happen right now, not what's going to happen later. Our expectation is, see, we have this upward trend here, and this upward bias. Our expectation, like the whole rest of the world, is that the trend is going to continue. So I don't ever think of this as a reversal. Now, it could be. I don't know. I have no idea. But I do know with a high degree of certainty that price is going to do something specific, at least in the short term. And that was this. Okay. And it happens every day, all the time. Like I said, this was just yesterday. All right. Any questions about this? One of the reasons I want to show you this is because in real time, it makes much more sense, doesn't it? When you watch the indicators develop, the setups, when you actually can see that things in hindsight, like those other charts, like those guys that show you those other hindsight charts that just never seems to work, you've got all the information you need right here in real time. And you can see, okay, I have all this information. Now I got 44 seconds to wait for the open of the next bar. If I get that rock star, I'm going to short it right here. So that's why I think showing you trades that are live, real trades with the indicators printing the way they print in real time, there's no confusion. What you hear from me here is exactly what you'll see in the trade room. It's exactly what you'll see on your own charts. All right. So, for those of you that haven't done it yet, we have a free trade room trial that you can sign up. Let me put that in there in the chat for you. And you can sign up for a free 5-day trade room trial. Happy to have you join us and hang out with us. It's, honestly, it's not the most efficient way to learn about what we do. What I just showed you is probably way more efficient, and there's hundreds of them on YouTube. If you want to look at our trade of the day playlist, uh, you don't have to sit in the trade room and watch, because we do a lot of waiting too, right? That's what day trading is all about. It's all about sitting and waiting for the market to become exploitable using your trading system. So we spend a lot of time waiting, which is not an efficient use of time when you're trying to evaluate something. I know people want to hang out in the trade room, and we're happy to have you. We're a nice group of folks that have a good time, except for that one guy. And we've got a special offer for you guys. If you're interested in joining us, you're interested in trading our indicators, if this divergence things makes sense to you, then by all means go to our store, use a coupon. The divergence 20 is the coupon code, and get 20% any of our divergence indicators, the Rockstar, or any of our trading programs. All right. All right. Any questions? Now I have a workspace that I can help you guys with if you have some specific questions that needs to be answered about anything that we've talked about here today. I can set up scenarios to help you answer questions. For example, I can build a chart, to help answer your any question you might have. Anybody, anything. You guys are just amazed. Have no questions. Yes, ES zoomed out on Friday. Uh, I tell you what I can do. The only chart that I have for Friday is the video of Friday, and I could send you the video and you could scroll it. We record the trade room every day, and I could send you that video and you could scroll it and take a look at it. Yeah, thanks, Mike. Yeah, only 2 weeks. Feels like you've been there for 2 years. I'm not sure if that's a good thing or a bad thing. Yeah, send an email to support@theintentionaltrader.com. All right. Well, if you guys don't have any specific questions, maybe go out and enjoy the rest of your weekend. Stay inside where it's nice and warm and snug. See someone typing. Divergence is the thing, man. It really is. We've made it really easy to use. Yeah, come hang out in the trade room. We're a wide open book. There's no hiding because I call out trades before I get in them. I let you know what I'm doing, and if I take a loss, I take a loss right in front of everybody. There's no hiding. I see somebody typing. That's why I'm waiting. Well, I do have some suggestions, but I would need to know more about what you're doing. So again, in that email, that would be a good way to kind of introduce me, and I could show you different possibilities. Um, One way that I know a lot of people use it is in the exact reverse. For example, if you are a trend following trader and you want to know where to start scaling your trades, our system is perfect for that. Absolutely perfect. Because our pullbacks are not always pullbacks. They can be uh, where price reverses. But if you want to scale, our system as it is would be perfect for scaling. Waiting again because I see someone typing. I learned how to type in high school because way back then, it was where all the girls were. So, me and my friend took a typing class, and best decision I ever made. Actual typewriter. So the long version of that story is we were in the halls during class. I don't know why, but the shop was down the hall in this building, wood shop, and we were leaving wood shop and going somewhere else. And it was the very beginning of the semester, and this loud noise was coming from this room, and it was so loud, and the hallways echoed, and it was sounded like machine gun fire. So we looked in there, and it's a sea of girls typing. We looked at each other. We should be in that class. You absolutely can. By far, the Rockstar indicator is our most popular indicator. And we have people ordering it every day off the website. And they using it in their own system for however they use it. I know we've created a real powerful indicator, and I don't know how everybody uses it. Nobody, I don't get that feedback. People just buy it, and I know they're continuing to use it because when they get a new computer or something, they have to get it relicensed. They send in an email, and we relicense it to the new computer. So I know people are using them like crazy, but I just don't always know how they're using it. It's on our website. Let me see here. Get you that real quick here. You can use this coupon code. You can use this Divergence 20 coupon code if you want to apply it to the Rockstar during checkout. Yeah, it's a system. I would not trade every Rockstar trade. I would use it to help you qualify your trade setups. It could be. Again, you're going to want to qualify it with whatever system you're using to help you get into a trend trade. Yeah, but because we're such a short term trend, we we we're just looking for a place where price is likely to change directions right now. And that can be with the trend or against the trend. It doesn't matter. All right. Well, everybody, thanks for coming today. I hope we get to see you in the trade room. Or if you need any help with any questions or whatever, just send support at theintentionaltrader.com, and we'll be happy to get you taken care of. All right, everybody, have a great rest of your day. And yep, I'll see some of you on Monday. Hopefully, see all of you very soon. Bye now.